Hello traders, good morning, afternoon, evening to everyone. How are you today? Good afternoon, good morning. How are you guys in this holiday here? So great. Which holiday, Roberto? We still have some time for real holidays. Something local or bank holiday in Spain? What do they celebrate? The move down of the euro? Constitution Day. Got you. All right, sounds good. So it's a good day for you as well, right? Danilo, every day is a holiday. That's the best, isn't it? That's the best. All right, guys. So let's begin. We have several updates on the pairs we are dealing with, we are working with. So let's go over them and let's see what do we have. So the pound dollar is. Let's start with this one. You see my screen, right? Should be there. The pound dollar is our first one, and as we were talking about yesterday, we do have some signs of a bullish hidden divergence. But in order to get this divergence approved and proved, what should we do? Go to 1 hour chart and make sure we have the same confirmation, right? So we have basically the same direction divergence. Now that was our scenario yesterday, and we didn't have any divergence here. Therefore, we couldn't go and buy yet. It seems to change right now because now there is divergence developing. I cannot say this is the one that I really love and think it's the best. It's really not. And also the 4 hour chart slope of the MACD is still pretty bearish here. It's making lower lows, but it does seems like that this is going to be, or this, the zone where the bears might start and give up on their positions, right? So this is basically the critical area right here, and this is what we were expecting for Monday. Why it is so critical? Because with everything that happens around Britain and the Eurozone right now is sensitive, and as we explained on Monday, due to the situation where these both the sides of the negotiations currently at, that could be the one that will boost this scenario. And we have to be very, very careful with that. And this scenario is not just doable, technically, it's very, very, very possible. We have this beautiful cycle, and we do need 2 waves down officially, right? Before we have any deeper further continuation or some kind of a range, but it means we still might visit the bottoms. So yes, after breaking this range that we have had before, right, after this range we got a beautiful momentum. We reached the next levels we were expecting and looking forward to, but now it brings us back to the critical place. And why this place is so critical? Because this is the current trend of the breakout. This is exactly the zone where we broke from, the range, right? This was the area of the consolidation. This is exactly why it brings us there, and most likely would keep us there for the next 1-2 days, and might be boosted up again after the non-farm payrolls on Friday. If we check some statistics to get some nice picture here, what will we figure out? Today we are on the 6th, right? And 6 is a possible day for bottoms. We are right inside the channel, right on action zone, right near the break of the range of the daily chart, the 4-hour chart, which we have been dealing with right here, right? Everything in line, and from here, with the next news to be published, the next direction would be defined. If we break below this trend line and this last low right here, that's a very good technical setup to look for sales continuation towards 128, 127. But this is really a great zone and great confirmation. Holding this trend line that is currently in play would identify a continuing strength from the bulls. And if we hold here and break this little 1-hour, 4-hour chart that we have and hold above, we are climbing higher. And the climb higher could take us towards 140, 145, according to the weekly cycles. 1 plus 1 normally is 2. This is why the pound dollar is currently trading only for the short term and not just the pound dollar. Recently, all the pound pairs we have, maybe just besides the euro pound. All the rest of the pounds, if you remember on Monday, this is exactly what we expected and suspected to happen, right? That we will be dealing with very tricky moves there and only for short-term directions. There will be volatility due to the behavior of the market, the current conditions on the market, but it's going to be tricky and maybe even very tricky. So the pound dollar is doing the correction we were expecting and suspecting, but now this is the critical cube, and I think this is exactly the place where we should be start looking for the next event, and the next event would be break of the trend line, hold by retesting in 2 waves and breakout again. That's a break in a break, well, double confirmation for momentum, right? Breakout, confirmation, because in this case we most likely can't find higher highs. So what we want to do is momentum, 2 waves retrace, boom, continuation. It gives us a very good confirmation, right? The alternative from this place would be exactly the opposite, break of the trend line, and which is going to happen, I don't know. And why would we waste our time trying to understand what is going to happen and trying to convince ourselves? Waste of energy, waste of logic, right? Let's see and give the market to decide. It could easily start to build up here the position, break and continue, or it could easily break the trend line, continue further for lower lows, retest, and boom, and then we're going all the way to 128, 125. Okay, so pound dollar, in simple words, still only available for short-term trading, which means only the intraday situations like here, like this one. That's what we got yesterday, right? We said on yesterday analysis that we don't have any divergence against us on the 1-hour chart, and the 4-hour chart not confirmed yet, so we are looking for one more low to be created, and this is how, right? We got a pullback, we got a divergence confirmation, we are looking for the breakout, and it happens right from an action zone, 15 minutes and 4-hour chart action zone. Beautiful place, risk reward with us, of course, for new low, because we want to go below this low, so the risk reward is in our direction, and this is how intraday opportunity looks like. All right, but now we are on critical place, and it's time to let the market speak. Okay, let the market speak, and let's see what we get from here. This is our current trend line that we need to follow on the 1-hour chart. We don't just want a breakout, as I explained before. We don't just want this. We want a double confirmation for one reason. We don't have here any option for higher highs. This is not valid high. This is not valid high. This is the only valid high, and that's pretty far away from the trend line. So breakout, 2 waves return on this or lower time frame, breakout again, and we get ourselves in this situation, minimal risk, maximal possibilities for profit. And this is the game, especially when it comes to such weeks. Any questions about the pound dollar, guys? Of course, this affects all the other pound pairs, but we are mainly bearish on all of them for the longer run. Pound Canadian is one to start to pay attention to, as we were talking yesterday exactly. Very likely that from these areas we are going to see these situations exactly, right? So we could easily expect two waves retraces before we sell. So yes, all the pounds are for short-term trading. Both directions are completely acceptable. Everything is according to the momentum of the pair, right? So for the pound CAD we saw, pound Kiwi is, from my point of view, is a beauty. Triple cycle, action zone, simply stunning, isn't it? We do expect here two waves retrace before a breakout and continuation, possible continuation. But right now, as you can see, we have all the reasons and all the conditions for possible pullback, right? This is a false break here. This is a higher high conditions. This low also false broken. So it really looks good for short-term buys. And we have some space for short-term buys. We can go easily to 38 or to 50%, right? And the most important thing for us is that we expect 1, 2, right? So basically, as long as this low holds, the intraday momentum would provide us these buy opportunities. Okay, guys? This is for the pound dollar. And again, this is why they all are for short term right now. Because for longer term, we do need this and a breakout. And then we can go and look for much longer term targets. But we don't have that yet. So the trading currently for us is for short term only. Okay, that's basically, I can go and cover all the pounds, but they are simply the same. Intraday for the same conditions, all of them. Besides the euro pound, which for longer run here we still are bearish due to the weekly cycle and this expectation, right? So yes, little pullbacks like we had last couple of days are acceptable, but we are bearish here. And our view didn't change. So that's all. Any questions, guys, about any of the pounds? All right. If not, that's good. The euro dollar continues its little momentum, but exactly like yesterday, I would like to remind you guys of this critical zone. Right? We are there and we are fighting it. So it is yet bearish. We don't have yet any reasons for buy. We don't have a trendline breakout, right? We don't. This is the current trendline developing. We don't have a breakout above it. We don't have false breaks, not 1 hour, not even intraday, nothing there. So it is bearish for us, right? On the last several days, actually from previous week, we started to look for short-term sells while we are below the 120, around the 120, sorry, right? And this is the critical zone, right here, right here. Break below that could easily start and take us further to the bottom of the daily range, the closer to the bottom range. But we must be careful. Careful why? Because as I explained before, that according to weekly cycle, that could be easy conditions for a new high. So if the trend line on the 4-hour chart is broken, and we do start to create higher highs, in our case break above this high, because that's the last valid high here, 118.50. If we break above that, it's time to avoid sells and wait for clearer opportunities. Okay, so that's about the euro dollar. Nothing changed from yesterday, just updating and basically a quick follow-up. Another interesting pair on the list is the pound versus the yen, because exactly like the other pound, bullish hidden divergence, and according to the 1 hour chart cycle, this is a double wave correction. The bullish divergence here is in play. We have our trend line. Break and hold above a trend line could be a nice call. Now, the only problem here is break above the trend line here could be not enough, because the last high is only here. We always want a trend line to be like with a momentum, right? Now, imagine this breakout. Would we get a new high of the MACD on this breakout? Most likely no, because it's pretty far. Most likely we will not. So how do we play safe in these conditions? Wait for the pullback in two waves on same or lower time frame and another breakout. So double breakout confirmation principle. That's the one that we do always to play safe. And in such market conditions, on such weeks, we must play safe, right? There is no real reason to be aggressive when everything is anyway in a short mode, in a short-term mode, right? So that's for the pound yen, and our levels are critical. We are in a very good place for possible bullish reversals. This is a pure duplication simply by the definition. If here, this is where I would expect it to start and happen. This is the place if the bulls are about to take the control. We are right next to the action zone, inside a rallying channel, and 6 and 8 are a pretty serious day for possible reversals. So let's see if we can get some good conditions from these levels. Break above, double wave retrace, break above, boom, we have our OK. Okay, so that's for the pound and basically the euro pairs. Nothing there changed. Just a follow up. There are a few pairs that we have to update. One of them is the Australian. Aussie dollar, with the news published yesterday, with the low GDP, regain a bearish momentum. Why we have to be careful here, guys? And this is today's most important lesson, so please listen carefully. What is always our plan for longer term reversals? When we get ourselves a convergence, right? False bottom convergence, or 3 wave up, 2 waves down. We had here 3 waves up, 2 waves down, breakout, and we have ourselves the conditions for continuation. Basically, this 3 plus 2 is what? Is just one leg and a correction of a deeper cycle. Deeper cycle means daily cycle. If you switch to daily, this is exactly what you will see, right? And then, and from here, look what happened. 1, 2, 3. Another 2 waves, another 3 wave cycle, which make it to be, right? On the 4 hour chart, it was built by several moves, but if we switch to daily, on daily it looks like only like a simple what? Double cycle. Double cycle is what? Is a corrective cycle. Agree? Double cycle is a corrective cycle, while triple cycle is a developing cycle. Double is a corrective. This was the reason why we were bullish for a week right now. 1, 2, 3, 1, 2, and we were bullish, expecting a push because of the triple cycle. But now, look what happens. It develops to be, this triple cycle is just one leg of a bigger view. This double wave correction is just a correction on a bigger view, and this triple cycle up is a correction just on a bigger view. A continuation just on a bigger view, right? So, you see how it develops? And you see the differences between the time frames, guys? Now, when we speak about timing, this is one of the things we need to understand, because what traders normally do, they go to 15 minutes and they start to buy, sell, buy, sell, buy, sell, expecting huge move to happen. From the 15 minutes, everyone has big dreams to gain the entire wave on a daily chart. Now, it sounds good, but it sounds good for legends or movies about traders. In the reality, it's a bit different. Why? Because if you go to the higher time frames, you would figure out that there is nothing, simply nothing, that approves your dream. And this is very important thing to understand. And that's what I always I have this conversation on pretty frequent basis when traders come and they present this idea like, but I have a false break on the 50 minutes. I have a trendline break on the 50 minutes. Can I go to the daily targets? And whoa. Hold on. If you have a bicycle, can you move between countries? No. Same principle is here. If you want your bigger targets, then have some bigger tools and confirmations to play with, right? And it's like you have a cucumber. You cannot prepare an entire dinner, right? Same here. 15 minutes means nothing for the bigger targets. Even 4-hour chart that we were dealing with, right here, provided us the buys we wanted. We got the intraday buys that we wanted, but we never got 1, 2, 3 for a big change. Do you understand the differences here, guys? And that's when I say some pair is suitable only for short term, some pairs are suitable for swing trading. This is exactly where it comes from. Do we have the conditions for the long run? Now, on the previous week, we did have it, but it doesn't develop the way we wanted. We enjoyed the buys. There were 2 or 3 setups to the buy side, and each of them paid. Each of them paid. But for long run, it's still not enough. And if we go to the Australian dollar for the long term, we can easily figure out that according to this, we can, by breaking the last low, go all the way, maybe even to the 0.73. Now, few things could happen from here. It could be easily a false break with a divergence and fly. But on the same ease, it could go and slowly take us towards the 0.73 zone, which is more than possible. So, for us, the Aussie dollar, if it breaks below this low, because this is the last low of the ABCD pattern, right? This one that we got from the daily. Break below this door, opens the Aussie dollar to both directions to be tradable. Okay? Break below this invalidation level right here. It's 0.7550. Psychological level. Break below that opens the doors for both directions to be tradable. With, of course, with a bearish momentum because of this last high, right? But it's very important to listen to the market and not to marry our idea or position or exposure. Okay, guys, what I showed and explained, is it clear? Is there any question about it? Please ask. Just wanted to present to you how important it is to be able to do the switch between the time frames, because everyone who analyzes 15 minutes or 1 hour chart have dreams about the daily or the weekly moves, and there is no reason to dream big before you get the confirmation for big. You know the saying, what happens in Vegas stay in Vegas? So same here. What happens on 15 minutes stays on 15 minutes. What happens on the 1 hour stays on the 1 hour. It's clearly not an obligation for the higher time frames. Yes, it could start and develop it. And this is exactly why we were bullish when this triple happened and double was broken. Right? That's exactly why we were looking for the buys. And we were enjoying the buys. But there is sometimes some conditions arrive that we just have to say it's enough. And yesterday with the last news, it was basically the saying from the market that, hey, Mr. or Mrs., your dreams are good, but my conditions are not. So dream about something else. Come back later, right? And this is exactly where we have to pay attention. And this is our level. Break below that opens the doors for possible further bearish continuation. I have no clue what's going to happen here. No one does. If it's going to be just one more false break and then we are back to buys, or we start to open the doors towards the 073 zone. Okay? But we do have to listen to the market, and reading these cycles is very, very important. Remember what I always say. Always ask yourself, do I have the conditions and the reasons to avoid something? And when you have these conditions, you have to listen to the market. Okay, exactly like with the gold. Remember on the previous week? Here, the break of this low. Now it's too easy to stay only bullish in our mind, but is there any reason for that? And the answer is no. We have to be connected to what happens, right? That's the beautiful innovation of Google Maps, Google Navigator, Waze Navigator, and so on. They see these traffics coming ahead and they let you know about it. And same here, if you don't want to stuck inside the traffic with your position, just listen to the sound. Okay, and same happens now with the Aussie dollar. Now, it still didn't break here, so everything could happen, but break below that, and we do open doors for possible scenarios. And same happened to us yesterday with the Aussie Kiwi. That was our case right here. Do we have any reason to fight this low? Now think about it. What happens if you try to prove the market that you are right? The market can what? Remember my my quote? Don't prove the market that you are right, because the market can bite. Right? Listen to the scenarios, how it develops, what it tells, what it brings, what it shows, what it develops. Right? And in that case, also same story. We had a triple down, which could easily start and create big two waves retraces, but instead of that, we just got a range. And that's why we said if we don't manage to break this range, that's a weakness sign. And break below this low will open the doors for possible bearish continuation. Continuation to what? Continuation to this. Now it looks, if you take a look on the 4-hour chart, it looks scary, right? Wow, what's this moves? What's this moves? It's scary. But then you go to higher time frame and suddenly everything seems logical. Right? And suddenly everything seems logical. Oh, that's triple cycle up. That could be double cycle down. Suddenly everything comes in place, right? And this is the complete reading. When your views connect to the pictures, this is where your opportunities come from. Okay, so once it looks scary on the 4-hour chart, believe me, it looks even scarier on the 1-hour chart. Believe me, it looks even scarier on the 15-minute charts. What can we do in those conditions? all that. Right? It's a headache, a big headache. So, my dear friends, this is why I show you this lesson. Well, not every time is possible to show such lessons because we need the conditions to be live. To show in theoretical in history, it's too easy, but that's not the case. We want to see that live. How do we deal with that live? What happens with that live? Right? That's how we learn to deal with that live. Because to show in presentation what happened in 2014 or 15, well, it's too easy, and that's why there are so many gurus exist, right? Because everyone is master on history. The question is always, what do we do in life, right? And that's why I want to show you these conditions, guys. Okay, let me answer some questions. Okay, Marcos, Marcos Roshin, John, thank you very much. There. Yep, Ken, here you go. You're saying when you try to prove the market that you are right, it could be very, very, very costly. Very, very costly. Attila, about the cycles, well, the cycles are all in the webinars. Specific conditions as they develop in the market, that's why we have the lives room for. Again, cycles webinars, that's theory, right? The general understanding. How you deal with specific conditions when they appear, it's impossible to do it. It's a waste of time. It is possible, but it's waste of time to do it only theoretical. That's why we do it the real way. The real way is live. Okay? Well, Roberto, if an Aussie Kiwi, if we break below this low, as I said, both directions become in play. There is a very good chance we are going to continue and see that going lower. Okay? So, this is exactly why I showed you. This is a critical zone. Break below that and both scenarios come completely in play. Alright guys, let's continue. The New Zealandian dollar, this one is basically unchanged. The only thing here that starts to be tricky is that this was our triple, right? This was our double. We broke it, but now it seems like it might go and start just to be this ranging correction. For us, the plan doesn't change. Our plan remains exactly the same. We need two waves down, and with the breakout we can go and buy, like we've had here. Yep, here, apologize. Like we've had here. That's the 4-hour chart one we discussed before, and like we've had here yesterday. Okay, so when the trend lines are broken and providing this opportunity, this is exactly our time to be inside. So if we get two waves down, breakout, this is our time to look for the buys. Everyone with his or her own strategy, of course, but that's the signs that give us the okay for continuation. And of course, remember, we trade in our direction as long as we don't have signs against us. What do I mean? When we got a breakout and an entry, and in such place you start to develop divergence against you on the time frame you enter, this is a time to cash out or move stop loss to break even. Why? To play safer. When the market is giving you a sign against you, does it make sense to go and fight it? No. Exactly like when you walk outside and you are about to cross the road and boom, the green line turned to be red. Would you continue to cross? Most of us, yes. We will just speed up, right? We will just increase our pace to win these 20 seconds or 1 minute more. But you understand that this is not the smartest thing to do. Same with Mr. Market. This is basically a red light. And here it's in your hands. What do you do with that? Do you continue trying to be a hero, or you listen to the market and make money, or at least make sure you don't lose money by moving stop loss to break even? So New Zealand dollar, the plan doesn't change. The New Zealand dollar, we are bullish, and our invalidation is right here. This is the low. Why? Because of the triple double. Same principle like with the OZ. 1, 2, 3, 1, 2. This is the low. While we are above it, we are looking only for buys, two waves, and continuation. Okay? That's per the New Zealand dollar. Okay, Cat Franc. Cat Franc basically is a good boy because it did exactly what we wanted from yesterday. We said that we should see that bouncing from around the 078, 78.20, and it did exactly from there. For us, well, this is why we cashed out partial yesterday, right? For the short-term traders. Long-term, we need two waves, breakout, and this would be the continuation sign. Two waves breakout, and we are moving down. Basically, the pullback retraces happened today after the Canadian news. They keep the rates, but some blah 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 behind the scenes make the pairs move. Okay, and dollar Canadian, same story. We are bearish as long as we are below the top of the range, not blindly, and well. Now it seems like there is a very possible scenario of two waves, right? Break below the two waves, and we can discuss about the further sells. Currently, of course, no certain reasons for that. Okay, let's continue. The next thing on the list to dollar franc, we are bullish there, no change. It's moving pretty nicely. By the way, dollar franc for the short-term buyers of you guys, we are approaching the 50%. We are right now on the 50% of the triple cycle. So it's time to make some money. From here, you can see yourself. It's slowing down. Some divergence signs start to appear. It's time. Oh, and here is triple descending cycle. It could easily start make corrections. Dollar franc, it's a very good and smart idea to cash out for those of you who are in longs from the beginning of the week. All right, let's continue. Oil and gas, still nothing clear here. Both directions are completely in play. With oil, I would be also careful a bit. Why? Because of this double cycle. It could easily turn to be just another continuation. Now, currently the momentum is bearish. There is no reason to switch and change, but this trend line could be the one to follow. Break above the trend line, and it could become bullish again. The current momentum is pretty clear. Natural gas, still no breaks above our trend line, so we don't do nothing, just in waiting mode. And indices pay beautifully. The main one that started to pay is the Japanese yen, Nikkei. Here, it took some time, but here we are, 300 points below the breakout. It really looks good. So let's see how serious it could develop. Nasdaq remains bearish while we are below the trend line and no higher highs, right? S&P still no triple. We are looking for triple, and to buy for aggressive mode, I explained yesterday also in the YouTube video that we have this special candle pattern. This is a pretty serious pattern. Let's see if it means something or not. We do need triple cycle. 1, 2, we want 3. If we got it, two ways to trace, and we are going to be busy with sells. German DAX, we are bearish versus the top of the range. It looks suspicious, I could say. Definitely not the best condition. It remains aggressive. sells, which means keep your risks low. And this is the invalidation, of course, the top of the range. Really tricky. German is not on its best tradable conditions. As per stocks, we have our Kraft Heinz unchanged. And as I said, those who missed the buys on the first round need 2 waves and a breakout again. Longer run, we are aiming 84, 86, our final targets. We had our first portion of profits at 82 for the longer run. That's what the rest don't change. And that's all. That's what we have for today. Any questions, guys? Anything from your list? Basically, what I wanted to the most important thing for me today was to show you the lesson that we've had with the Australian pairs and why it's so important to stay connected to what the market tells us. We never can be smart. We never will be smarter than the market, right? So it will be complete waste of time to try to prove the market that we are right. It will just end up with spent money, wasted money, right? Costing money. Okay, guys, if there are no questions, thank you very much for being here. I hope that this lesson was valuable today for you. As I said, every time the market brings us special conditions we can cover live, this is what we do. That's the entire idea, because theory is theory, right? It's easy. For theory, we have webinars, everything based on presentations, but that's not the live conditions. Live conditions is what we deal with live. How do we make our decisions live? How do we accept conditions from the market? And at the moment we know to do it, at the moment we listen to the market and say, hey, okay, if that's what you tell, I'm not going to argue. And just accept it. At the moment we listen, we accept, this is the moment when we have the full control over the changing conditions. And at the moment we have the control, we can do the things as we want. Thank you for being here, guys. Enjoy your wonderful day, and I'll see you tomorrow.